right now. Do I buy? Do I sell? Do I hold? Do I wait? And what if I do want to buy? What if I do want to sell? What advice do you have for me? What creative things should I be thinking about as I go through that buying and or selling process? That's what we're talking about today, and we're starting right now.
I'm Sherri Ann Green with Coldwell Banker. Welcome to my YouTube channel that guides home sellers and home buyers in Washington, D.C. and Northern Virginia.
So I have thought a lot about what to put in this market snapshot video. If you follow my channel, you've seen that I've been doing these market watch, sort of market snapshot updates. And if you don't follow my channel, now is a great time to subscribe. So make sure you subscribe, hit the bell so you don't miss anything. I've been doing these market snapshot videos. I think this is probably the third or the fourth one. So what I'm trying to do is just take you through the market as it shifts and changes. And sometimes the shifts and changes are really small and sometimes they're not. And that's sort of what has been stalling me, if you will, this week to post a video and to film a video, because I've really been sort of struggling with what to talk about. I don't want every market video to just be the same thing. Here we go through the home demand index, and here's what's changed and here's what hasn't, and nothing's changed. And so what I wanted to do today was really think about the application of where the market is to you, whether you're buying or selling. And frankly, we're going to focus a little bit more on buying than selling. But if you are thinking about selling, listening to what I'm saying about buying should help you in the reverse, if you will. So it should help you think about how to be a good seller, how to position your property price-wise, and what to be prepared for days on market-wise as we go through this market snapshot video. So what I want to start with is a quick look at where we are. And I really love these market snapshots that I can put together for you. I can put them together for each month. And that's what we've sort of started with in a couple of videos. I'm going to pull up September and October. So October just closed yesterday. I'm filming this video on November 1st. So there could be some properties that closed yesterday, maybe late yesterday afternoon, and the MLS just hasn't been updated yet with their information. But I think in the grand scheme of things, we probably have a good look at October. So let's go to the market snapshots for September and October and see how they sort of compare. So if we look at September and we look at October, in some ways they are very similar. The average sales price has changed. It sort of went down in September and now it's coming back up in October. And what you want to think about here, and it's in the fine print, so I'll read it to you. September is showing an average of June, July, August, and September, whereas October is showing an average of July, August, September, October. Okay. So that's why it's a little bit off, but it goes through and compares with that same period last year as well. So you'll see that our average list price continues to go up, but you'll see that the average sales price, they're coming down. And that's a point I want you to hang on to as I go through this video, because I'm going to come back to why that's relevant. The average days on market is changing. So we are over 30 days. And I think that's important for everybody to think about, whether it's 35 or 33, doesn't really matter. The idea is that homes are sitting for a month on average, which means, yes, there are some things that are still closing very quickly or going under contract very quickly, I should say. And there are some things that are lingering longer than that. And the reason that's important is when you're a buyer, this days start to make sense. And we'll get into that a little bit later as well. So stay tuned as we talk about how all of these metrics sort of apply to the buying and the selling. So then if you look at the month supply, that is changing as well. And what the month supply is, it's also called the absorption rate. And that is how many months it would take us to sell the current properties we have on the market if no more were added and the current trend of buying and closing each month continued. So we're over 3 months, almost to 4 months. And that is significant too. During the pandemic, this was about a month and a half supply. So we've certainly seen a slowdown in some ways in that direction. I want to jump over to Market Watch, and this is a graphic that is right in the MLS. It's the first thing that I see when I log into the MLS every day. And what this Market Watch graphic shows me is how many coming soons are there new today, how many new actives are there, how many things sold, and how many things have expired. So when I logged in this morning, the first thing that really jumped out at me is the number of properties that has expired as of today. It's over 230. And if you look at that line compared to the other ones, it just really stuck out to me. And as I started thinking about it, I thought, well, wait a minute. Yesterday was October 31st. A lot of listing agreements are written so that they end at the end of the month. So maybe that statistic is just sort of what it should be relative to the month, the end of the month, but that the other numbers just look really small because our inventory is low, and we know we've talked about that. So what I thought I'd do is pull another market watch that's not just within the last 24 hours. What do the last 7 days of this market watch look like? And what do the number of expireds during this last 7 days look like? And I was surprised at what I found. If you look at the market watch, October 26th through November 1st, the number of expireds is very close to what it is that final day in October. The number of expireds for the last 7 days is 277. So it's even higher than the last day of the month of October, which is what I thought would be the higher day. I thought more properties would have ended sort of at the end of that October. The seller has in their mind, let's write a listing agreement that gets us through the summer and the beginning of the fall market. We ended on October 31st. But the last 7 days, we've seen 277 properties expire. Now, why do I bring all of this up? If you combine the days on market that we are seeing rising over 30, and you see how many expireds we have, over 230 today, over 277 for the week, it starts to give you a data point to think about, or two. We say we have an inventory problem, and yes, we don't have nearly as many new properties coming to the market as we should. But properties are going off the market and not selling. They're expiring, and we're allowing that to happen. And what I mean by that is buyers need to jump in. There is a real golden opportunity there when a property has been sitting on the market and it may be nearing the end of its listing agreement, and a seller may be willing to negotiate with you. And that's what I want you to think about in this market, is the opportunity that may arise. A seller may put their house on at a level that makes sense to them based on what they've seen in the lagging statistics of where the market has been going. Prices have been rising, and therefore my price, my value of my house is probably here. But as their house sits on the market, they may be more realistic to taking a different number versus their property expiring and not selling. So that's something that as a buyer you want to think about. As those days on market raise, it doesn't necessarily mean there's something wrong with the house. It could simply mean there's less buyer demand. There are less people who have seen this property. There are less people who are willing to negotiate and try. And if you try, you may be really successful at getting a great place for a price that's different than what you're seeing as the list price in the MLS. Now, I know that a lot of people are a little bit trepidatious about the rates right now, and I get it. If you watch the market constantly, they have changed. But one of the things you have to remember is that you can never go back and renegotiate the price of a house. So if you were to have bought a house last year, you probably paid more for it in total, in terms of the list price, the sales price, than you would pay for that house today. Now you can always go back and renegotiate your rate. You can refinance your mortgage, but you can't go back to the seller and say, hey, I've changed my mind. Why don't we renegotiate what I paid you for that house? You can't do that, but you can go back and change that rate. So that's something to keep in mind as you think about how do we negotiate a price that I'm comfortable with, that reflects the rate that I'm getting, that reflects what we're seeing in the market, and that I can live with long term. Now what I want to do is I do want to look at the home demand index just for a minute, because I want to sort of flip this to thinking about a seller for just a second. So if we look at the home demand index for October, it remains steady. So there are people who still want to buy. And where do we see those people who want to buy? They are in single family homes above 950, condos below 570, and condos above 570, townhouses all prices. So there are still buyers who want to make a purchase. What we have to do when we position your house is position it in a way that attracts those buyers who want to come in. They may not want to spend as much as they would have spent a year ago because of the way that their interest rate has changed. So how do we price it accordingly to make them want to come in, take a look, and crunch those numbers with their lender? So what I want to point out is that there still is buyer demand in many categories and many price points. It's a matter of how do we attract them to come into your house, and we start doing that with the right positioning from the beginning. So what are my big takeaways from all of this? Today, right now, November 1st, first week of November 2022, try. If you still want to buy a house, I want you to try. Now you have to be realistic. A seller isn't going to take a 50% cut, a 40% cut. They're probably not even going to take a 30% cut on what their list price is. But every situation is different. But I want you to try. I want you to talk through with your agent about what might be possible. The competition is so much less at the moment that sellers are being realistic in many cases about what they will do with you. And that leads to my second pro tip is get creative. How can you position an offer that still gets the seller to what they want, but gets you what you want, which is this house? So some things to think about are offering slightly over their sales price and asking for a seller credit, or just straight going in at their sales price and asking for a seller credit. This was something that we did not do during the pandemic. It just really wasn't happening. There may have been one or two here and there, but sellers weren't willing to give up any money when they had so much competition to buy their house, right? But now it may be something that makes sense to a seller. And a lot of ways to position this is that the seller can actually help you buy down your rate, your interest rate on your mortgage, by giving you that credit. So that's the way your agent can position it to the seller. Look, my client really wants to buy this house, but they need a lower interest rate. So how are we going to get there? We're going to give you a great price, but we need a little bit of a seller credit so we can use that toward the points to buy down my client's loan so they can buy your house. It's a really creative way to think about how you get into a house and how you get the money that you need to buy down those points to get a better interest rate for you long term. The other thing to think about is using an ARM. Now, everybody doesn't love an ARM, but I want you to talk through using one with your lender. As we talked about earlier, rates can change. Yes, they can go up again and they can come down too, but you can't go back and renegotiate that price of the house. So if you can get the house at a price that you think is correct for you, potentially you get in with an ARM and then you watch the market and you refinance. Your lender is going to help you do this too. They're going to keep on top of your rate and they're going to send you a notice that says, hey, now's a great time for you to refinance. Now it can really make a difference in you refinancing the rate that you have. So think about an ARM and talk through that with your lender to see if it makes sense for your situation. The other thing I want you to think about is investing. And I want you to think about this as a long-term strategy, right? So maybe what you're thinking about is you really want to buy a house. You can't find the exact one that you want, but you do see some things that are priced pretty well. They're just maybe not in the right neighborhood that you want to live in long term, or maybe they're not the right size for you long term, but it's something that's doable for a couple of years. If you can get that house now, negotiate a great price for that, you move in, you stop paying someone else's mortgage while you're renting, you move into your own property, you live there for a while, you refinance it while you're living there, while it's your primary residence, and then you leverage that house to buy your next one. And now you have a rental property. And if the market changes in such a way that you can make an enormous profit by selling it in 2 or 4 years, then you do that. But if you want to start building wealth and you want to start building a real estate portfolio, this may be the great way to do it. You jump into a house that you can be in for a year or two. Maybe it's not as big as you need long term, but for a year or two, you can handle it, right? And you get into that house and then you use it as a rental and then you use it to leverage your next place. What we're seeing is that prices may have changed slightly, but they're not taking a plummet. And that's what I want you to think about as we go through all of these market videos as well. So far, we are seeing prices change and stabilize some, but they're not taking a crazy dip. So waiting for the prices to drop by 20% just may not happen. And so prices may continue to rise or stay right where they are. So figuring out a way to get creative and get the house that you want, that may be your best bet for today. And that may be your best bet long term. What are you seeing in your market? Is it similar to what I'm talking about in the Washington, D.C. market? I'd love to know. Would you leave me a note in the comments and tell me what it is that you're seeing or you're feeling, or what else should we talk about in these market snapshots? I'm looking really at my market, but yours may be a little bit different. So tell me what it is that you're seeing. And while you're here, make sure you watch this video next. I think you'll find it helpful too.